So you think about moving to Las Vegas, Nevada, and you just heard recently about this President Joe Biden charging folks with good credit or making people with good credit pay more for their mortgages, and people with bad credit actually pay less. It's a little confusing. That sounds strange. So we're going to get after that today in today's video, and we're going to make sure there's some clarity. We put out a really wonderful personal one earlier, but today, like we said, guys, as we always do, let the show begin because we're getting after it right now. If this is your first time to our channel and you want to make sure that you get all the information in regards to moving, purchasing, selling homes here in the Las Vegas, Nevada area, make sure you subscribe below, tap the bell for notifications so that you can be informed of when our new videos come out and when we bring great value to people just like yourselves. Now, it doesn't matter if you're moving here and you want to buy a property in 9 days or sell a property in 9 days or buy and sell in 90 days, whatever it may be. We'd love the opportunity to make sure that we can be of service to you. People just like yourself, they reach out to us all day long. They send us emails, they send us texts, they send us smoke signals, they send us all that kind of great stuff, asking us for help in regards to making their move, making their purchases, making their sales here to the Las Vegas, Nevada area. And it really has been our pleasure to be of service. So please, again, guys, if we can be of service, make sure you tap that bell, subscribe below, so that we can make sure that we can reach out to you and provide that great value we've been able to provide for other people as well. My name is Levert Pompey Benefield, and I'm the team leader here of Team Levert with eXp Realty in Las Vegas. And again, like we said, we are talking about Biden's new, as of May 1st, this new program that's going to be coming out and what's going to be happening with that particular program. Let's try and jump into it. Let's try and get some clarity. This is going to be our part 2. First video I sort of kind of threw out after I jumped on and I saw some social media posting. We heard about this come in. Even though it's been around forever and a day, this program actually has been around forever and a day. This program now has a new spin on it as of maybe the last few months. It started to get more traction in the latest news here or in the latest media, maybe over the last 2-3 weeks, whatever that may be. So to give us more clarity, what this particular bill is about, who it's for, all those different types of great things, we're going to try to give us a little bit of clarity in that sense. Now, what does it do? What have we been hearing? We've been hearing that this is a bill that's punishing us that have great credits. People like ourselves who have worked our tails off. We've done everything we need to do. We've been paying our bills on time. We've been reporting things correctly. We don't have any late payments. We don't have any late charges, all that kind of great stuff. Folks like ourselves that have credit scores that are in the 7s and the high 7s and the low 8s, and the high 8s and everything else, we're going to be punished because now we have this program where we're actually going to pay for those people that haven't been taking care of their credit, that don't have great payment schedules or that don't have great payment history, so forth and so on. All of those folks that are now these bad people or these bad borrowers in the sense of being able to go out and get some loans. Everybody shake, 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 shake. I can understand why some people may feel that that is the case. I understand why people feel that is going to be the case. Yes, in a sense, are we being punished? I don't like to feel like I'm being punished for anything. My brain, I'm not a 13-year-old kid. I'm not a 5-year-old kid. I'm not being punished for anything in that sense. What I'm seeing in this particular thing, I think the first thing we need to realize is what this program is all about. This first program. Okay, so like I said, I'm going to share my screen and we're going to jump onto the FHFA, their website. Now, this is quite different than FHA. Again, some people are thinking that this loan is going to be for FHA borrowers, all those different types of things for first-time home buyers. This loan is really going to set itself up more so, I believe, for conventional borrowers, conventional. And that means conventional in the sense of people that are purchasing their properties at that lower credit score up to the higher credit scores. This is going to be more for conventional. So again, this is coming from the Federal Housing Finance Agency, the Federal Housing Finance Agency. That's quite different than from FHA as far as those people that are doing first-time home buyers, helping out with first-time home buyers. This is their big goal. This was the big thing that they were hoping to do. FHFA, and I'm starting here. If you can see that here, I'm going to start there. We're going to start from this section, finish up with here. We're going to be reading that section. FHFA is taking another step to ensure that the enterprises advance their mission. This is the goal of this. Advance their mission of facilitating equitable and sustainable access access to home ownership. This is the goal. This is the reason that they're putting this program out here, hoping to be able to do more for those folks that are supposedly in a tougher scenario as far as being able to qualify for their loans, lower credit scores, get them into housing. And I 100% support that. I totally support that idea. I think that that is a great thing. I think that's something that we should be doing. We should be promoting more access to home ownership. The fact that we don't have a lot of homes out there to provide them home ownership to as part is a different story completely. But nonetheless, I'm a big believer in providing home ownership, getting people into homes that normally have not been able to get into these homes 100%. Now, this is another chart or another sheet that I think a lot of people are out there seeing, and this is sort of confusing people. We are using here, I'm moving my guy here all over the place. We're going to Mortgage News Daily, and we're going to show you a little bit of this article. And this is some of the graphs that people may be seeing. Is there really a new unfair mortgage tax on those with high credit? This is that chart that a lot of people have been seeing in different variations. This is going to be the chart in regards to what people are paying with their LLPAs. And most people don't even know what this is. The first thing I'm going to do here right now is to encourage us, make sure that we're going to talk to the real people who are doing this day in and day out. I am not a mortgage loan. I am not a mortgage person. I'm not a loan officer. I am a real estate team leader. I deal with these folks. I have some understanding of these things. I always encourage my clients to get their numbers, to get their information regarding their loans, to get their true understanding of their mortgage amounts, all those different types of things with their lender, with their bank, who their person they've chosen to in regards to getting these numbers. These are the numbers that I think a lot of people are seeing, and they're being confused. People with these lower scores over here to the left, these 620s, the 630s, 650s, so forth and so on. They're getting these rates over here into the far corner of getting adjustments down like 1.7, 2%, all those kind of great things. And then folks up here and these higher numbers in the 740s, the 750s, all that kind of great stuff, we're ending up with these 3/4 point rate increases and all those different types of things. We've got to make sure that we're understanding there's a different things between fees and rates. That again is one of the biggest things that people are confusing. Fees and rates. We've got to make sure that we're understanding that. This LLPA, what exactly are these LLPAs? These are going to be your loan level price adjustments. So basically what this basically means here, everyone is going to come in with their own picture. Everyone is going to come in with a certain amount as far as they're going to put down. Everyone's going to come in with a certain DTI. All of these debt to income ratios. All of these things are factors. All of these things are factors. When you talk to a lender, people want to come in and they want to know, well, what is my mortgage rate going to be? It's tough for them just to say, oh, well, your mortgage rate is going to be this. They can give you a general idea, but they're going to have to gather a lot of information before they really can give you specifics. So it's the same thing here. We're going to have to gather a lot of information before we truthfully know what you're going to be affected by with this new thing, in the sense of if your credit score is high, if your credit score is low, where you're really going to fall and where those numbers are going to look like for you. I'm going to give you a very basic sort of home one or situation one versus situation two, being the good credit score person versus the bad credit score person, what those numbers will be, all of that kind of great stuff. So we're going to sort of insert, if you will, we're going to insert an example. So right now on the screen, we're going to insert this example. We're going to take this example, and so let's insert a slide so we can give a little bit of a very basic sort of understanding about what may be happening in this situation. And I say may be happening. So we're going to look at this slide. So this particular slide is going to be for illustration purposes only. And in this particular slide, we have an example of, let's say, a high credit score person of about 740 credit score. They're going to put about 10% down. Right now, let's say they were going to be getting a 3% interest rate. And again, these are not true numbers. Of course, we know 3% isn't out there. We'd love it if it were. It's not out there. However, let's say if they were getting a 3% interest rate right now, after May 1st, again, a person at 740 putting down 10%, they would be getting a 3.25%. So that would go up for them in regards to what their interest rate would be. Again, we know these are not interest rates of today. This is illustration purposes only. So they would be getting a 3.25% after that May 1st timeframe. Now, a person that has a lower credit score, let's say, for instance, a person had a credit score of about 650, and they were only able to come in and put down a smaller amount of 5%. In today's market, they were getting a 5%, but after May 1st, they would be able to get a lower interest rate of about 4.5%. So their interest rate would go down. So again, looking at this chart or looking at this graph, sorry, this is not even a chart or a graph, this slide, looking at this slide, yes, a person with a higher credit score is going to be paying more or would be charged more in regards to their interest rate, or will get a higher interest rate, even though they have a better credit score, so forth and so on, and they put more money down. And the person that has a lower credit score putting less money down would be getting a better interest rate. Now, jumping away from the chart or jumping away from that particular slide, one of the things I would encourage, and just want to make sure everybody understands, I don't necessarily think this is a great idea. This is not the best idea. Looking back at what the FHFA was hoping to do, hoping to be able to have more access to home ownership, I get that goal. I applaud that goal. I'm 100% behind that goal. Do I believe that necessarily this charging of people with better scores is necessarily the way to go? I don't think it's about charging people with better scores more interest rates. This again is about giving more access for those people who have not been able to have access. Because we got to remember sort of kind of this thought process. There are people that have great credit scores, phenomenal credit scores, that don't happen to make a certain amount of income. So not only would we be affecting those people in the sense that have paid their bills on time, that are taking care of everything, that have great credit, but they just don't have the means, they don't have the money, they may not be making a certain amount, all of those different types of things. So they will have great credit scores. For some reason, I think people are equating bad credit with low income people. I've been blessed to make a certain amount of money for a long period of time, and there's been times where I've had crappy credit, and even though I've been able to have, even though I've had that crappy credit, I have the knowledge, I have the know-how, I have the network, I have the connections to be able to get that credit back up to where I know it needs to be immediately. I know plenty of people that make, 300, 400, 500,000, $1 million a year that have horrific credit, that do not understand how to take care of their credit, so forth and so on. So I think we've got to be careful with thinking that this is a low income thing. Yes, we want to help those people that probably have not had access to the ability to get into homes as readily and as easily before in the past. 100% I'm about that. 100% I'm about that. And 100% I'm about educating and allowing people to get their credit scores better and to know how to keep their credit scores better. And at the same time, I'm not about taxing or hurting people that have done things well, that have maintained their credits, so forth and so on. Does the credit system need to change somewhat? Another story completely all on its own. I think it definitely needs to change. I think we do need to start looking at people's rental history in regards to what they've done in that sense. That could be something that could help boost their scores, because sometimes we have people out there that have student loan debts, guys. They have student loan debts that are sinking their credit scores, that are destroying their credit scores. And they may have access to funds, but it are just simply destroying their credit scores. So I don't think that this credit system that we currently have is the best credit system in regards to what we're doing out there. So what am I getting at? I'm all over the place on this. Let me just kind of land the plane here. What I strongly believe is that I think this is a great attempt by the FHFA and the Biden administration coming together, since they're backing and endorsing this plan. I think it is a great plan to try and get more people into home ownership. I think it is a fantastic thing in what we're doing. We need to throw a couple more spaghetti pieces up against the wall to figure out how we can get more people into home ownership. Do we need to necessarily go after the pocketbooks of those that are in better situations? No, because sometimes those people in better situations, as far as their credit is concerned with, are not always the people that have access to funds. Great credit does not necessarily mean that you're wealthy. Great credit does not mean that you're wealthy. People have great credit and they don't have funds sometimes. So I think we need to figure out how to make all of this better. I think it's going to be a nightmare for my colleagues and friends that are in the mortgage industry, the banking industry, all that kind of good stuff. Compliance issues sounds like they're going to come up all over the place. So again, I think we need to be patient with this. We need to slow things down. We need to stop making this a them and they kind of situation. We need to stop making this about, we're trying to have to pay for somebody else. No, I think the administration is putting some things together. They're trying to put things together. So give them some pace, give them some grace, I should say, give them some grace in regards to trying to get this solidified. Do I think this may change in a couple of weeks, in a couple of months after we really get into it and they get feedback from the industry, from the fields, from the market and all that kind of great stuff? Hopefully some changes will be made, so forth and so on. But let's slow it down. Let's check in with our lenders. Let's check in with our professionals like myself and everyone else. Make sure we're keeping people up to date about true facts out there. Let's make sure that we're not spinning this out of control, that we're not doing this for clickbait. We're not doing this for headlines and all that kind of good stuff. Good luck with that. I'm sure we'll still be doing that. But nonetheless, guys, reach out to us. We'd love to connect you with true lenders, true people that are out there, really being able to give you options and different ways of looking at this, different scenarios in regards to what you could qualify for, be it conventional or be it FHA. Maybe FHA may be a better scenario for you in regards to doing this versus the conventional scenario with this. So reach out. We'd love to be of assistance. Make sure you subscribe below. Again, tap the bell for notifications. Hopefully that didn't add to the confusion. Hopefully that allowed you to say, let's give this administration, let's give these programs a little bit of time, a little bit of grace, see how we can basically look at them, use them to better our situation, so forth and so on. And I don't think it's about necessarily taking away from us as people that have good credit scores and all that kind of good stuff. But maybe, again, we're just focusing on an opportunity to have better access and more access to people that need homes and housing. And we'd love to be able to do that for you guys. So if you're looking to buy, if you're looking to sell here in the Las Vegas, Nevada area, or really across the nation, reach out. We'd love to be of service. See you guys in the next video. Take care.